Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the February edition of Digging into the BI. My name is Kevin Galogli, and we have 4 new stock presentations we're going to do. We do have the handouts in the handout tray, so go ahead and pull them down. We're having trouble getting the last of the SSGs in there, so if you want all of them, you can reach out to any of us, and our emails are at the end of this presentation. And you can also reach out to any of us that are making the presentations. But here are the 4 stocks we're going to be looking at tonight. And let's go to the next slide, please. We getting there? There we go.
Yeah, I put it up.
Oh,
Okay.
darn, mine must be slow. Mine must be buffering. I apologize. Just a disclaimer, we have, this is for educational purposes only. We are doing our complete SSGs, but we, as all people in the BI community recommend, we sit there and always recommend that you go on out and do your own study to be able to make a look, to make sure you can come up with your own assessment of it. And if you see down at the bottom in the blue highlighted and underlined, this session is being recorded, and you can click on that and it will take you to the YouTube channel where we will have it. And we also have a slide at the end of this that will be able to help you with it. So let's go to the next slide. So anyway, so who we are, we're Better Investing, and those links there for investment education and long-term fundamental investing. Those things can be able to tell you a little bit about us. I'm sure most of us in this audience are Better Investing members, but we have designed this also for people that if you're someone who is new in the club, or you're new to BI, or you're just taking a look, that you can be able to take this stuff and get a look at what we're sort of doing. So go ahead and share this information you have with other people, with a caveat that they should do their own studies. Next slide, please. So what we should be doing is learning how to navigate. There you have your control panel, and that's in the upper right. You can collapse that thing. You can move it by grabbing it on the mouse where the green is. By default, your microphone is muted. We will unmute during question time, and you can raise your hand during that time. Also, we have people watching the question box. So go ahead, and if you have any questions or concerns, go ahead and put them in there, and someone, one of us will be taking a look at that. So let's go to the next slide. So what we're also doing is we're showing you if you have some problem with your GoToWebinar, all of us can hear each other. So if you're having audio problems, check your computer settings first, and then look under help and see what you can do. And like I said before, don't forget to be able to download those handouts. And again, there's that hyperlink for a 4-minute video on how to sort of get started with GoToWebinar, if that helps you. Next slide. Sometimes the viewing can be a little bit small or hard to read, so you can click on either the zoom thing to make it bigger, or you can also, if we go through things kind of fast, you can quickly take a screenshot of it and be able to, that way you can remind yourself of what you wanted to ask us during question time, and you can do that. Next slide. What we're doing here with this webinar is we're trying to show you how to use the BI magazine and its resources. If you're not a BI member, there's a 90-day trial. We focus this on sort of people that are beginners or people that are a little uncertain of their judgment to be able to come together. We're trying to show you best practices and showing you what those of us in one of the 3 model clubs between the 2 chapters tend to do. And also we want to be able to sort of be part of a larger BI community for Maryland, DC, and Virginia. Next slide. So in just over an hour, we're going to be able to do 4 stock presentations. 2 will come from the BI magazine, where you have to be a member, the Stock to Study and Undervalued feature. And then we'll have 2 other presentations that come from the website or the magazine or someone's personal experience. You can see some of the other locations where we get it from. So let's go to the next slide. And if you ever want to be able to see what we're doing in advance, you can always see this as a BI member by going into the Welcome to BI, the About Us, either through that where the arrow is showing over to the green or all the way down at the bottom. And you can see what the upcoming stocks are that are going to be presented. So next slide. So what they're doing is they already have all the way up through April in there. So we will have people covering all of those as we go through it. And you can be able to see that they announced this back in early January that what these stocks were going to be. Next slide. And as always, yes?
I think we're on the news release. Is that where you want to be? I'm sorry. For some reason I got messed up.
Let's go to slide 11. I'm already on sort of future announcements. I'm sorry if I
got it.
Trying to move through a little bit faster to make up time, and I don't think I'm helping. Sorry, folks. We're not professionals. So if you want to make sure not to miss any future announcements, when you sign into BI under My Account, you'll be able to see a location that has email and product subscriptions, and you can be able to see and get notices on the stuff that we're doing here in the area. So let's go to our next slide, 12. And with that, there's a listing here that will show the email and product information. Sign up for the local chapter news, which is where the arrow is. But before you hit that Save Changes, go back up and hit that where the yellow was highlighted, the Better Investing Weekly newsletter. And if we go to the next slide, I will show you what that is. I find this very helpful. So this is the weekly newsletter for members, and it shows you all the stuff that's coming on up in terms of webinars or events that are going on around, stocks that have been put up in what's called First Cut or stock ideas and screening. And it comes out usually around the close of business on Thursday. So go ahead and sign up for that. I'm sure most of you are, but always share that with people in your club and community that may not know that. So let's go to the next slide. And into the larger community, we do have both chapters have Facebook pages. Sometimes we get things updated, sometimes not so much. I was able to get the notice on this up there, but this is also good to be able to share with non-BI members and to be able to see what's going on in there. So go ahead and you can share this information and those URLs with other people, and they can certainly join us there. Next slide. And Cheryl, it goes to you.
Yes. The DC chapter once a month has a Money Matters book discussion. It is all virtual right now online, but it is the third Tuesday of the month. And so the next one is going to be on the 15th of February. It's from 7:30 to 9 p.m. And the book that they're going to be doing is the Tap Dancing to Work, Warren Buffett on Practically Everything Collected and Expanded. It's by Carol Loomis. It was done in 2012. And you can see the information on there. And also below is the link that will get you there to the book discussion. And as I said, it will be coming on a week from Tuesday and at 7:30 p.m.
Very good. Kent.
Good evening, everyone. I am Kent DeYoung, and I serve as the president for the Maryland Model Investment Club. But tonight I'm representing the Maryland chapter from here in Huntsville, Alabama. And as you can see here, the chapter is started its stock picker contest. However, if you look at the news and articles site, the Winter 2021 newsletter, you'll find that the chapter is also sponsoring a stock selection guide class a little later this year in April. Okay, next. And now I'm switching hats to represent the Maryland Model Investment Club. The MMIC gathers the second Saturday of each month from 10:30 to 11:45 or so. And the club provides an example of how an investment club might run. The MMIC demonstrates club operations, as well as investment and portfolio management decision making. Each month, the club has an education segment, a new stock study, as well as a review of current holdings. And currently, the club is meeting via GoToMeeting, and the link is there. So do touch base with us if you're interested. I'm done.
All right, you have the Montgomery County Model Investment Club, Kevin.
Okay. Yes, I'm a member of Montgomery County Model Investment Club, also known as MCMC. We got 8 partners. We're going to be meeting, God, it says December 15th. That's clearly wrong. Sorry about that. It is February 16th. This is what you get when you edit fast. That GoToMeeting link is correct. In this month, we're going to be doing education, which will be the top 10 BI videos for new members and why. And then we're also looking at universal display, which is going to be on tonight, but someone else other than the presenter from tonight is going to do it. And if you want to know anything more about our club, our chapter president is also our club president is also our point of contact, and that's Marilee Hardesty, and that's her email address. Back to you, Cheryl.
All right. I am a member of the Model Investment Club of Northern Virginia, otherwise known as McNova. We started in 2008. We currently only have 11 partners, so if somebody wants to join an investment club, we're looking for members. The next meeting is going to be February 8th, which is, this, as I said, the second Tuesday of the month from 7 to 9 p.m. When we do meet live, which will be occasionally, it will be at the library. Otherwise, the GoToMeeting link right there is the thing to connect with. And for education, we're going to be doing both a watch list review and using Google Docs to store your documents or to do presentations from. And the stock study is going to be Litha Motors, which is not the same person presenting as presenting tonight. I am the point of contact, and there's my email right there. And please contact me if you have a question or would like some further information on the club. Now we also have upcoming local SSG classes from the DC chapter. We're going to be doing classes for 2 consecutive Saturdays, March 19th and the 26th. Both of them are going to be from 9:30 a.m. to 3:30 p.m. They are going to be virtual, so please contact us and we will get you the links once the links are set up a little closer to the dates. The Maryland chapter also is going to be doing their class on April 16th. They have the one class, and then they have a follow-up class after that. Both chapters teach their classes twice a year, and we're a learn by doing approach to investing. Now, Kent, is your class going to be virtual or will it be live?
That is still to be determined. So it kind of depends on what happens between now and April.
Okay, but I imagine you'll be setting out an Interspire a little closer to the date, telling the people.
That is correct, yeah.
Alrighty, very good. Okay, also we have a online promote visit a club. There is a listing of some of the clubs that you can look at in terms of joining in both the Maryland and the DC chapter. As well, we can also do a directors visiting your club. So if you send a request either to myself for the DC regional chapter or to Kent for the Maryland chapter, we will tell you how to get in touch with us to have a director come and speak at one of your meetings. So either one of those are 2 very good programs that we are promoting tonight. And back to you, Kevin, for the BI Magazine.
better unmute myself. It helps. The BI magazine, the January, February is combined, so you should already have it. But what we always show you here is how you can be able to find it using your computer and laptop, tablet, smartphone, and other electronic devices. And I found I've been getting it, much quicker and faster on any of the electronic ones, although I'm still a paper kind of guy. But let's just go to the next slide. And what we're doing is this will show you how to be able to find this information. If you don't know how to get it electronically, you can be able to get it for your mobile devices. If you look at where the green arrow is and the red arrow where it has the analyst reports and other resources, when they do have one of the featured stocks, there's usually additional information that goes with it. And this is where you can find it. So if you see in the paper version of the magazine where they say there's additional resources, this is where you come to and this is where you get it. Next slide, please. And so the next thing is that here's an article from the January, February combined. I picked out sort of the fundamentals of investing column. Sam Levine or Levin, I don't know how he says it. He's both a CFA and a CMT, which means he's at the highest level of fundamental investing, a CFA, and at the highest level of being a technical analyst, a CMT. So that's kind of a rare breed. But when you're hearing all this talk about inflation and stuff like that, I thought this really kind of article was a good way to sort of remind us of all the things, because a lot of noise is going on and we're trying to focus on things long term. So take a look at that article if you haven't already read it. Next slide. All right, so here are the first of the stocks we're going to be looking at. We're going to be doing them core. And Cheryl, why don't you take over?
All righty. I am going to be presenting Concentrix tonight. The ticker for that is CNXC. I found it. It's a stock study with BI, and BI Better Investing also has some first cut reports out on the December 18th. Then you can find that on the BI website under first cut. I am a member of the DC regional chapter, happen to be the chapter president currently. Concentrix can be found on the NASDAQ. And also, as I said, first cut stop reports are available on the Better Investing website. And we also have something called the heat map, which you can find under, it looks like a little hourglass, a little expanding image glass, and you can see on there the heat map. It's under the technology sector. And this is, again, where I found it, and if under the first cut. It's a medium-sized company. Again, the sector is technology and the industry is information technology services. And you can read some information. The stock report was done by Robin Ware on December 18th of last year. Went to the company homepage, did research, and also doing an online SSG. Also, if you happen to be the premium service called Investor Advisory Services, which is also connected to Better Investing, you can also find it on there as well. Now, Concentrix is a technology-enabled company that specializes in customer engagement and management. They provide end-to-end solutions that facilitate communication between clients and their customers. They provide analytics and process optimization. They support client-centric operations and back-office processing across the enterprise. Gartner, IDC, and other industry researchers estimate that the global CXM industry generates sales of $85 billion and is growing 3 to 5% annually. Historically, CXM service offerings were mainly telephone call centers where customers could contact a company to order products or pay bills. Today, CXM offerings provide consistent customer support across all channels of communication, including chat, email, social media, messaging, and voice. CXNX applications are evolving to help businesses maximize revenue opportunities and provide faster, cheaper customer care by utilizing automation, artificial intelligence, and other technologies. Other times, it's also referred to as ICX, which stands for Interactive Customer Experience. Given the increasing digital retail environment, a great resource for staying updated on CX news and innovation is Retail Customer Experience and the ICX Association. CX refers to how a business engages with its customers at every point of their buying journey, from marketing to sales to customer service and everywhere in between. And now their expanded market, they're saying, is going to expand to 410 billion from the 85. Now, this shows you the 50% increase in CAGR from 2013 to 2021. And you can see that is definitely a very steep line, that they've increased from non-GAAP operating income of 6.9% out to 13.2%. And the operating budget from 160 million out to 6 billion and 28 million in 2021. Concentrix today, they are unparalleled in their ability to deliver high value CX and technology globally. They are deep within the industry and domain knowledge, and they're exceptional with technology, digital, and analytic expertise. In 2021, they had revenue of over 6 billion, a fiscal 2021 non-GAAP of over 800 million, and free cash flow of over 380 million. They've got 16 years average, the tenure of their top 25 clients. They're in 70 plus languages. They're in 40 plus countries and over 6 continents. And they cover over 100 of the Fortune Global 500 clients. They're also a trusted partner to enterprise and new economy brands, with select Fortune Global 500 and new economy clients coming in all the time. 8 of the top 10 consumer electronic companies are a Concentrix client, 4 out of the top 5 tech companies, 7 of the top 10 fintech companies, and 5 of the top 5 US banks. They also have 3 of the top 5 e-com companies, 4 of the top 5 US health insurance companies, 3 of the top 5 global IPOs, and 4 of the top 5 social media brands. Their top 5 clients represent 25% of their revenue in 2021. Had a recent strategic acquisition of PK, which brings strong portfolio of intellectual assets and advanced CX technology, specifically enhances CX digital transformation capabilities, strengthens presence in high growth digital IT services market, and enhances financial profile through accreditation to EPS and growth rate. Some of the priorities for future growth are going to be continued execution of their client strategy, invest in technology solutions to disrupt and differentiate, to continue to expand in emerging markets, and to expand capabilities in key growth areas. Long-term financial targets are equal to or greater than 10 billion by 2025. Right now, they're lightly covered by analysts, which means most of their information is quantitative in both Concentrix and Morningstar. They do not have a value line at this time. Now, I did my information over the core, and here we are comparing to historical sales to peers. The first three companies shown on the core are some of the peers or direct or indirect competitors. Sewer Direct has very small historical sales, and by the end of 2020, only has 19 million in sales. However, they are growing in the last 5 years by 14%. EPAM and Sabra have sales numbers more in line with Concentrix, but only EPAM and Concentrix have positive growth, while Sabra has negative sales growth. Concentrix leads the pack historical earnings, 59% for the last 5 years, while Sabra earnings dropped during the pandemic to negative territory and remain at that level during the first 3 quarters of 2021. The pre-tax profit margin is used to measure the operating efficiency of a company that tells us how well the company management is operating the company's assets and expenses. While Concentrix does not have the top number, it does show consistent increasing numbers, with 2021 almost doubling. Sabra has a huge negative average due to 2020. Return on equity, or ROE, is the fourth indicator Better Investing uses to identify well-managed growth companies. It tells us how effectively company management is using the shareholders' money to make a profit. Concentrix, only being a public company for the last 5 years, has still managed double-digit increase growth in the last 2 years. EPAM Systems has a slightly higher 5-year average with mixed growth, while Sabra numbers fell by a huge amount again in 2020. Final indicator of management skill is how debt is employed and managed by those that run operations. Concentrix started with a higher debt, only slightly higher than the industry average, but has been serving that debt to lower levels since then and is down to almost half of the industry average, while Sabra has been increasing their debt to almost twice the industry average. As mentioned in a previous slide, Concentrix has very limited analyst coverage, but the analyst consensus estimate is 12.9%. I use 10% as my conservative number since this is still a young company with only 5 years of historical data. The ACE earnings per share long-term is 17%, which will take earnings to $16.88 or more than double what it is now. Again, I was conservative for the same reason as sales. With 15%, that will take me to a 5-year projected earnings per share of $15.49. There is a range of price to earnings numbers increasing over the past 5 years, and I felt comfortable choosing a slightly higher than average high PE forecast of 30 due to more recent increase in earnings that should drive the price higher. The forecast of 30 PE at the high earnings per share forecast of $15.49 should bring a high price forecast of $464.60. Again, due to increasing trend of historical earnings per share, I felt comfortable to choose a forecast low PE of 20 that yields a low price forecast of $153.80, which is 80% of the current stock price, which gives a possible stock correction of 20% in the next 5 years. With the present stock price set at $190.90 and forecasted low price at $153.80, puts that price well into the green buy range when zoned at 25% in the buy zone, 50 in the hold, and another 25 in the sell. We use a combination of the potential annualized price appreciation using the forecast high PE at 19.5%. The compound low return uses the forecast average PE and is 15.2%. That means if we sell the stock at the forecast high PE of 30, we may see returns of 19.5%, while if we sell the PE at 20, we may see returns at 15.2%. In 2021, Concentrix will offer a 0.5% dividend. In conclusion, CNCX is a medium-sized, steady growth company. It's fairly well managed. It's overpriced, trading at above the future average high 5-year PE. It's buy up to $231, which is offered at a 3-to-1 upside downside and 15% total return, and it could be a candidate for your watch list.
Thank you
On to
very
you,
much,
Kevin.
Cheryl. Okay. Well, I'm going to be telling you about America's Car Mart. This is the undervalued feature for February. And I can safely say I knew nothing about this company before I started this whole operation. But it's one of the fun things about doing this is that you get to learn about it. Next slide, please. So it's I said the stock to study, it's actually the undervalued feature in February, but it won't be in the magazine until March, so it'll be a couple weeks. So that makes it kind of hard because it's not one of the more active stocks in the BI community. It hasn't been featured in Ticker Talk. It can't be found in any of the predefined screens at BI. Just like with Concentric, Value Line, CFRA, and Morningstar all have a quantitative review. There's no analyst taking a look at it. There was one first cut, and that's the location of it that was done in December from Kathleen Richards and her crew in the Cleveland area. But so it really sort of leaves you having to trust your own judgment. And let's go through it and see if it makes sense. Next slide, please. So America's Car Mart, it's not in any of the major indices like the S&P 500 or even the small caps or what have you. It's a small size company as of its last fiscal year, but it just, with the trailing 12 months, it's now actually a medium size, which is just over $1 billion. It's in the consumer cyclical. It's an auto and truck dealership. And really what it does is it focuses exclusively on the used car market, and it deals with people that are trying to get stuff with that have don't have good credit. They're non-prime auto loans. And that's how actually this company started, was originally giving non-prime auto loans. Its headquarters is in Rogers, Arkansas, which is the same county where Walmart is. And some of the competitors are there over on the right-hand side, and they do have dealers in 12 different states. So let's go to the next slide. So what I have here is I usually like to pull out the CFRA, and they have a really nice summary of things, but that one is only for ones where they have an analyst covering it. But most of that stuff can usually be found in the annual report or in any of their SEC filings. And this one, in CarMart's annual report, is basically their 10K, which they have to file with the SEC. So it sort of gives you a nice, good view of it. They consider themselves, they focus exclusively on what's called an integrated auto sales and finance, which means the only people they give loans to are people that come and get their cars from them. Most of their dealerships are in towns under 50,000. The number of employees, a lot of them are wage an hour with commission. And they're trying to target a market of people with limited financial resources or past credit problems. And they have a collections department. They give a lot of control to the local dealers, and they try to grow with some organic growth and small acquisitions. They tend to look at sort of small, sort of cars and trucks, no SUVs, really kind of simple cars that have an average retail sales price of just over 16,000. They're trying to get used cars that are between 5 and 12 years of age. And all the local dealers, they can make their own car purchases. They find places to get them, and then to be able to sell them, and they set their loan rates. And the average size, again, from their 10K is most of them have about 20 to 90 vehicles on the lot, and they try to turn that over 8 to 9 times a year. Financing, you can see it. Some of them are paid, they have to pay their stuff weekly, bi-weekly, or monthly. And then in the lower right, you can see sort of some of the payments that go with it. Next slide. So this is the CFRA industry survey, which covers more than just this area. But the point I was trying to highlight here is the stuff that's in yellow in the sort of middle right is the auto retail, where they're kind of positive. and there seems to be a real strong correlation with the general economy to people purchasing these to purchasing cars. Let's go to the next slide. And this is the Value Line Industry Survey, and it shows this just came out in January, and they're generally pretty positive. We hear all the stories about supply chain shortage and stuff like that that's going on. It doesn't affect the secondary car market, which is what is a nice way of saying a used car. But as you see in the lower right, it's a very timely industry. It's doing quite well. And because there's not as many cars out there, that people are going into the used car market to be able to find new vehicles. Next slide. And so this just sort of shows the non-prime auto finance market and how it basically sort of really that 35% of all outstanding auto loans go to people with a non-prime credit rating, and you can sort of see how they sort of bounce, how they sort of go around. And this comes straight from their investor relations page. Next slide. And this is a really good summary of it, that autos make up 22% of the entire U.S. retail economy. That's from the U.S. Census Bureau. And the used car market is $840 billion in the blue. And then inside that is the final slide where it shows the market share of that 840 billion between the top 100, which are in blue 9%. Peer-to-peer is when you sell to friends or something like that, and the others are other dealers. So you can see that there's a lot of room in a fragmented industry to be able to grow. Next slide. And this shows the top 10 retailers for the used market. They're put up there. America's Car Mart is just inching into it. And you'll see actually in number 5 is Litha Motors, which will be our final presentation tonight by Kent. So you can be able to take a look and see how they differ from how they do things. Next slide. So this is just a quick look at the SSG Plus. And you can see where I have the green arrows. There's a big jump in the pre-tax profit and earnings from 2019 to 2020. But more importantly, is I like to be able to see this, is you can see where the red arrow is, and that's the current price, and it's down at the bottom. So in other words, this is either a great buying opportunity, and again, remember, this is the undervalued feature for this month, or it could be a falling knife. And that's sort of when I see something like that, I ask myself that question. Is this a table pounder that has a great buying opportunity, or is this something that's crashing? And that's what we'll take a look at. Next slide. And so when you look at an undervalued feature, you got to remember that this isn't necessarily the same as a stock to steady where you think it's going to double in 5 years' time. It can be beaten down. It may not necessarily be a long-term holding, but generally something that you'd hold for maybe at least a year or so. And with that, they think maybe it can bounce by about 14% in a year, when a normal year, which we haven't had in a while, a normal year of growth in the stock market is around 10%, so a little bit above average. But you do have to watch these undervalued features a lot quicker, or a lot more often. Next slide. And when you're looking at this, this could potentially be a turnaround. I'm not certain that this is so much a turnaround, but when I do see something with the price down really low like that, I tend to think of it as, okay, what's going on and what the turnaround is. And those questions over on the right-hand side are always good. Do they have the right people in place? Do they have enough resources to last through any downturn? And what's their plan to recover? And the answer to is I think they have the right people in place from what I've been reading. They seem to be pretty transparent about what they're doing. They seem to they have enough liquidity with this, and their plan to recover. I'm not certain it's so much a recovery as just people are getting squirrely, and this could be a great opportunity. Next slide. If you want to learn more either about falling knives or the auto retail business, here are some slides. I found the second one down below the CNBC it was a long story, about 16 minutes, on just sort of what's going on in the changes in the auto retail industry, that people are doing a lot more stuff online. So go ahead and take a look at that. And if you want something that shows a little bit on the bearish side, the third one, it says the Fortune Fool. That's actually a typo. It should just be the Fortune. They did that in November. It's kind of bearish on the whole market. So, not everything's always sunshine and puppy dogs. So take a look at that. Next slide. So here's our historic sales growth. And those are the competitors. I put in CarMart, AutoNation, and Lithia, and those color codes respond to it. And just because one is higher on this doesn't mean it's necessarily better. Remember, it's the actual value of them. So in this case, CarMart is clearly smaller than them, but all three of them have really good solid straight lines. So you can't complain about that. Next slide. This is the historic earnings per share growth. In this one, you can see, again, the rate, both Lithia, which will be shown a little bit later, and America's CarMart seem to be doing pretty well, and AutoNation really bumped up, but they're all really, really solid. Normally, as I go through this, I can see some that sort of have to be dropped, but I'll say, quite frankly, all of them look really pretty solid. So this is a great area to sort of do an industry study and take a look at all of them. But we're going to continue with CarMart and go to the next slide. So here's a pre-tax profit on sales, and this is where CarMart really does a great job. They really seem to track their collections and their credit worthiness, getting people in there, and they really try to build a relationship. And 10 to 15% of their sales are referrals, so they really try to be able to keep that stuff going. And I think it really, really shows in this that pre-tax profit is significantly better than any of the others there. Next slide. And the return on equity against the peers. Again, you see Lithia looks really, really good, as does CarMart. Sometimes those numbers can be triggered a little bit by playing with debt. But overall, 16% for CarMart's great, and all the others are really, really pretty good for where they are. Next slide. So going with debt to capital, remember, the lower the better this is. And in this particular case, CarMart has a lower number, and they've really done great in the last couple quarters, how they've been sort of slowing down. But all of them are pretty well managed. CarMax, that could be their high debt, it could be a function of how they operate. And I honestly can't tell you some of the internal stuff there. And you see CarMart has or I should say Lithia has a high number, and we'll hear about that when Kent talks about his presentation. But I don't see anything that looks that bad. Next slide. So my forecast sales, I'm going with 11%. It's a little bit below the analyst consensus, but it seems to be pretty consistent with what they're doing. Next slide. Earnings per share, I came with 10%. And again, it was just sort of by looking at things and sort of getting a feel for it. Again, there isn't a lot of analysts to sort of back me up, so you have to sort of trust your own judgment. But I think that those are pretty reasonable based on reading their annual report and their 10Ks and stuff like that, and reading up on the industry. The high PEs, I have this at a 9 for the high PE. And with that, I took out a couple years that I thought may have been a little on the high side. I think this is a PE that's coming down, but it still is not necessarily a falling knife. And down in the lower right-hand side is the low price, and I sort of selected a low PE of 5, but I felt that even then the price was too high when I came in. It came in at like 78, 79. So I dropped it down to about 2/3, I think it was 64% of the current price, because I want to, with something like this, it could be dropping a little bit more, and I want to give myself a little bit of wiggle room. Next slide. So in the buy zone, I got this as at a buy, it's I think it's 4.2, 4.7 to 1. I think I cut it off here. I'm sorry about that. But it's clearly in the buy zone. It's currently selling at 93. I have it a buy up to about 100. And just like with Cheryl, it doesn't pay a dividend and it's not planning to pay a dividend, but that the potential average return is just short of 20%, which would mean that it's going to more than double its money in 5 years' time. Final slide. Next, please. So it's a small, sort of medium. It's a steady grower. It's well managed. It really is on sale. I think it's a buy up to 102. It's clearly a candidate to me to have on a watch list and maybe even purchase it. But again, because it's the PEs are so low compared to where they've historically been, I'd want to watch this and watch a little bit closer. And some of these figures sort of get a little bit too close to me for too good to be true. So that's when I start to say, maybe I'm not doing things right. But overall, I like it. And I think it's clearly something ought to be on a watch list. And maybe if you want to even take a look at purchasing. And let's go to Gladys and let's hear about Universal Display.
Good evening. I'm Gladys Henriksen with the DC chapter of Better Investing and the Model Investment Club of Northern Virginia. My company is Universal Display Corporation on the NASDAQ exchange under the ticker OLED. I found it on the Better Investing website. Next slide. Next slide. Here it was on a Ticker Talk 5 and 5 review in October of 21. It's also in the two first cuts, which were excellent in December, and on the ticker heat map under technology, you can see it bright green. So buyer sentiment says it's a buy. Next slide. This OLED is in the cyclical semiconductor industry, a technology company. It was founded in 1994, and although headquartered in New Jersey, it has offices worldwide, especially Taiwan and Korea. Its sales last year were about $500 million, making it a small company, but as you'll see, it's been growing well. It researches and develops the microscopic thin display panels called organic light emitting diodes, or OLED technologies. And it works with large manufacturing partners like Samsung, Panasonic, and Sony to adapt these thin display panels into their products. Next slide. OLED, next slide. OLED is gradually replacing the LED market, and here are the market drivers. OLED has phosphorescence power, which offers lower power usage. It has superior aesthetics. Its image quality and contrast are sharper. The speed is faster, and the thin film more flexible than LED. And it's becoming more cost-effective with fewer manufacturing steps. Next slide. Next slide. The bubbles in the top row summarize the technologies that Universal creates and improves. OLED in the far left and the new foldable FOLED on the top right. The bubbles at the bottom show how they sell these technologies, and more on the next slide. There are three areas. They have license and royalty fees, they have patents, and then they do device and architecture intellectual property consulting. Next slide. The bar graphs group into two categories these companies' key products, and they show the components of revenue and income over the last 5 years. The dark blue you see shows the device and architectural intellectual property consulting, where they design and adapt devices that emit these charged particles. The light blue are the license fees. Note adjustments in 2018 for the Tax Cut and Jobs Act, and in 2019 for a change in the company's accounting practices on when they recognize revenues. Next slide. These next 4 slides we'll go through pretty quickly because they just illustrate the major electrical components in which the OLED displays can be found. Here are popular watches and smartphones from Apple, Google, and Samsung. Next slide. Here are some TV screens, auto navigation screens, games, and notebooks from Sony, Nintendo, and others. Next slide. This newest universal display product is OLED, a thinner, more flexible OLED now being used and tested in Samsung's Fold and Flip phone and Lenovo's foldable notebook. If those of you like me have been watching the Winter Olympics, Samsung has been showing off its flip phones with these OLED backlighting displays from Universal. Next slide. And finally, there is the opportunity to replace light bulbs in basic task lighting as well as car taillights with OLED technology. Next slide. OLED's display market potential shows that that the mobile units have dominated and continued to grow, with moderate growth in other areas. But if you go to the next slide, the panel area, the light blue TV demand dominates. Currently, OLED has penetrated just 4% of this market, but a number of engineering developments are underway to meet this demand. Right now, OLED is more expensive for large screens and has a lower lifespan. But with these engineering developments, CFRA analysts see TV as a huge OLED opportunity. Next slide. This beautiful flower just shows 8 key areas in which Universal has concentrated its efforts and patents. The dark blue printable phosphorescent OLEDs is coming from a new printing device that Universal is building and licensing to produce that new thin foldable displays. Next slide. This is the first look at the SSG. Notice how the sales, pre-tax profit, and EPS have been pretty up straight and parallel. But there are a number of income bubbles noted in 2015 and 2018, which I've noted here, an inventory write-down and the Tax Cut and Jobs Act. Look above the sales line at the long price bars. The stock prices have been volatile in this semiconductor industry. Current price is at the bottom, potentially a good entry point. On the center right, analysts estimate 2-year growth at over 24%, in line with historical growth. Next slide. A group of analysts forecast over 20% sales and earnings for OLED. In fact, Yahoo, not shown, lists OLED as a February buy. But CFRA, the second one, is the most conservative, with sales growth of 18% and an average PE of 28, largely because of the supply chain issues with the semiconductor chips. Next slide. Next slide. Trying to find the best of the best, I look for semiconductor industry peers. None of these make displays like OLED. However, there are 2 small companies with sales less than $1 billion, but one nearly twice the size. However, look at the debt on the right-hand side. The industry average is 36%, while OLED has none. Next slide. So here are my judgments. For sales, I followed CFRA with 18%, given the current chip supply issues. And for earnings per share, I used the preferred procedure of 14.7%. Next slide. Note the management metrics at the top. Profit on sales has been a whopping over 30%. Return on equity has been a decent 13.5%, but note the hits from 2015 and 18. By contrast, The trailing 12 months per Morningstar financials on the SSG tool shows it to be almost 20%, which is excellent. Moving into section 3, I removed those exceptional PEs from 2018, which left us with an average PE of 57 and a current PE of about 36, or about 30% lower than the average. Note also that the company pays a small dividend, about 0.5%. Next slide. Choosing high and low prices, I focused on PEs. For the high, I used the current PE of about 36, resulting in a high price of 288 within the value line range. For low, I used a PE of 28, following both CFRA and Morningstar Financial's forward valuation, giving a low price of about 112, which is also about 80% of the current price when I did this stock of 143. Next slide. I used a 4-part zoning method, and that put our current price within the buy zone with an upside downside of 4.7 to 1. The total return with a high PE is over 15%, so we double our money in 5 years. Using the average PE, it would be almost 13%, which is pretty good and well above what we hope from a small company. Morningstar Financials gave OLED a current PEG ratio of 0.9, or undervalued, which supports this buy recommendation. Next slide. In conclusion, OLED is a small-sized growth company. It's well managed, as evidenced by its double-digit growth, no debt, small dividend, and robust patents. While in the cyclical semiconductor industry, it's currently on sale, trading 30% below its 5-year average PE. And it's a buy up to 100 and almost 146. It could be a candidate for purchase. Thank you.
Thank you, Gladys. And Kent, you're up.
Okay, well, hello everyone. As Kevin mentioned, I use the SSG Plus to analyze Litha Motors. By necessity, the presentation this evening is a significant abbreviation, so if you need more information, give me a call. At the very bottom, you'll note that there's some evolution of the company from essentially an on-site, in-person sales company toward more technology, and we'll get more on that later. Next slide, please. Okay. So I found Litha in an atypical way. First, I heard about it from a model club member a few years back, Fred Shaw, when he looked at this. And then while doing a digging into the BI seminar for AutoNation, I found it as a peer to AutoNation. And then I also noticed it in the BI ticker heat map. And I thought with the challenges of chips, it might be worth looking at. So that's where I got interested in it. Next slide, please. So who is Litha? Well, it is one of the largest auto dealerships in the United States, and it's so large you may not even have heard of it, because Litha prefers to buy smaller, underperforming dealers out in small towns throughout the country, and yet they do not put their own name on it. They leave the original dealer's name on it. Next slide, please. So you'll see here that Litha sells many, many different car brands. And next slide, in November, Litha expanded into Canada. Next slide, there we go. Purchasing Pfaff Harley-Davidson. And I was a bit surprised when I saw this in the news, so I look forward to reading more about this in the 2021 annual report. Next slide, please. So as you'll note, Litha Motors is a large company in the consumer cyclical sector. As Kevin alluded to with Mart, used car sales are becoming an increased part of Lithia's revenues. Next slide, please. This slide actually shows the total number of business lines that Lithia has. And as of the most recent data, as in the last quarter that we have data on, Lithia has these 6 business lines. As we might expect, new and used vehicle sales are a majority of the revenue. However, what's most fascinating is their service, bodywork, and parts seem to be a cash cow for the company, bringing in money even after they sold cars off to their customers. That those customers keep bringing the cars back to Lithia for service. They also do finance and insurance for cars. Next slide, please. Okay, this is something that's really fascinating to me. Driveway is a new Lithia digital brand that they launched in July of 2020, right in the middle of the pandemic, and it came at a really good time. They've been actually working with this digital sale of vehicles since September 2018, when they purchased a part of Shift, now a competitor to Driveway. And they expect that Driveway is going to reach 100% of the United States by the end of this year. And the whole idea here is that customers use their phone or their computer to buy a car, or, and that part of this cash cow thing, to set up service for the car that they already own. And what's interesting is that Lithia will send a service advisor to a customer's house to pick up a car if they need it to be serviced. So that I found to be very interesting. Next slide, please. Lithia expects that Driveway will grow from $0 essentially in 2020 through $9 billion, or about 15% of the total revenue in 2025. And as of September of 2021, they had significant revenues. What was most interesting to me is that 96% of the customers using Driveway are brand new. And so this is a great way for Lithia to create organic growth in their company. Next slide, please. So Morningstar has assigned Lithia a narrow economic moat rating. Lithia has some really distinctive rural market focus that provides pretty much a monopoly for each of the brands that they own in the rural parts of the states. And this monopoly is provided by state franchise laws that basically state that there cannot be another rival store of a particular brand within a certain distance of an existing store. And that fixed distance really feeds into Lithia's business models, especially in towns like Fairbanks, Alaska, or Midland, Texas, or Billings, Montana, where they have little to no other dealers there. The other thing that's interesting, and we talked about this cash cow, the service logistics create this inelasticity of demand, which creates a lot of pricing power. They can actually raise their prices on their services, and people will still stay with Lithia. Next slide, please. So Morningstar's bulls say that Lithia has a really good runway that's really long to grow on. They are opening up acquisitions in the US and, as I mentioned, Canada. FAF Automotive was the first vehicle dealer in Canada, and of course it's a Harley dealer. However, the bears are a little concerned about the revenue estimates that Lithia is putting out there, 50 billion in 2025. They think that that's pretty aggressive compared to where the company could be. And if gas prices go up, which they've been doing, Lithia suffers because they have a lot of pickups and SUVs out in the rural part of the country. Next slide, please. So we've seen, next slide. We've seen what some analysts think. So what do our tools tell us? Well, we can see here that it's up, straight, and parallel. or reasonably parallel anyway, with our sales and pre-tax profit and earnings per share, and the little dots there with the estimates. Next slide, please. This next slide shows something very interesting. The black line is the book value per share, which has been increasing. That actually is showing the total intrinsic value of the company per share. What that says is that shares being mostly steady or flat, the company's value for each shareholder has been increasing. And then the free cash flow, which is that purple line, which is like shooting straight up there. That was very interesting to me. Represents the cash flow that's available before any cash is paid out for dividends, share repurchases, or debt payments. So that's cash that can be folded back into the company to build the company up. Next slide, please. Okay, so here are the quarterly trends. They look pretty good, especially considering the last year with sales shooting kind of straight up, and pre-tax profit on sales, or the profit margin, doing this upward climb. The one thing that I think that we would need to investigate a little further is what caused that earnings per share and pre-tax profit drop in the third quarter of 2021. And so so that's something we would need to investigate a little further. Next slide, please. So this slide shows the growth trend over the last 10 years of Litha Motors. And you can see that the growth of sales has been declining, even to the point, big red square there, in 2019, of revenues growing between 2019 and 2020 to 3.6%. Yet their earnings per share in that same year was a 68% growth. The numbers we really want to focus on, in addition to that 3.6%, because that's really interesting, is the sales for the last 5 years and the earnings per share for the last 5 years, both of which are doing pretty well. So next slide, please. Next, please. Thank you. Okay, SSG Plus as well as SSG Core allows us to compare company to their peers in industry. And here, Litha is highlighted with a purple box, and the peer group is by the blue box. Next. The green stars that you'll see popping over indicate the top performer in each comparison category. And you'll note that Litha is at the top, usually significantly in all categories, except for pre-tax profit on sales and debt to equity. Both of these are worth further study to understand the reason. Next slide, please. Next slide, please. Okay, here we're talking about analyst estimates, and this is an example of using spreadsheets to organize data from all sources of judgment. And I use professional analysts to augment my own analysis of a company. In this case, I've highlighted Value Line, Yahoo, and Zacks as 3 of the corroborating analysts for my estimates on revenue growth and earnings per share. And with the help of Corey Cloud from our club, I also borrowed and updated and extended the COVID-19 analysis of earnings created by Doug Gerlach. You will note that each analyst surveyed estimated a growth rate larger than 15%. In fact, the actual revenue growth rate during the COVID pandemic from the start to the present, September of 2021, was 37.4%. The actual growth rate of LAD over the last 3 years, including 2021, has slowed to 9%. So if we eliminated that, we actually get a growth rate from 2017 to 2019, another 3-year period of 13.8%. Next, please. So these red boxes are highlighting significant variances from those overly optimistic analyses from Wall Street. And you'll note that I include the Better Investing Preferred Procedure as a data point for my judgments. Next, please. Value Line also provides a 5-year estimate on revenues and earnings per share for the company. That's the blue and the green box. I note that their revenue estimates is only about 80% of the company's estimates, and the earnings per share estimate's about 90%. Next slide, please. So I'm happy with the upward trends of the profit margin. And as you'll recall, profit margin is where LAD lagged behind its peers. Seeing it improve is a good sign. Return on equity, although growing, I think it requires some further investigation to see what that dip is between 2017 and 2019. And then the debt to capital, as Lithia uses debt to finance acquisitions, I'm less concerned about the high level. Regardless, I'm really happy to see that it's working on paying down its debt, because that means the return on equity is a little more believable. And finally, you note that the 9-year growth rate of revenues, earnings per share, pre-tax profit are superb for a company as large as Lithia. Okay, even so, over the last few years, the growth rate is slowing. So next, please. Given that 9% estimate and the 1.7% preferred growth rate, we get, back one slide, please. There we go. We end up with a 5-year estimate of $31 billion for sales and $36 per earnings per share. Okay, let's go on to the next slide now. There we go. Keep going. One more. There we go. So the purple boxes here indicate the price to earnings ratio of interest in the judgments. And in the lower right corner of the slide, you'll see an excerpt from the value line that indicates that in 5 years, the price per share should be somewhere between $365 and $550 per share. Note the big purple dot. This is the price per share when this value line was published. It's substantially below the value line or the cash flow line, which is that green line. And according to value line, that indicates an undervalued company. Next, please. The brown box indicates the price of the company at the close of the market on Friday night. Next. Now, if LAD continues to grow at our estimated growth rate, then the earnings per share growth rate of 1.7%, it should yield a price of $502 in 5 years, which is pretty good. Note that we also have an upside downside ratio of 4.4 to 1, which means we'll get a pretty good return on our money. In summary, we've seen that it's grown its revenue every year for the last 10 years. And if we were to purchase it at Friday's value, we'd get a 6.7 return rate. Okay, next slide, please. Next slide. In conclusion, Lithia is a large-size, high-growth company, seems to be very well managed, and it's innovating for some organic revenue growth. It's underpriced, trading below its 5% high PE, and it's a buy up to $303. However, if you buy it below $253, you get a 15% return. And it has been doing some ups and downs. Next.
Thank you very much for doing that. So there are the 4 stocks. We're going to do a quick recap and then we'll let you guys vote. So again, there are 4. Let's go to our next slide. And again, we sort of talk about the T. Rowe Price life cycle of a company. It's featured in the manual that we use, at least a graphic representation, that all companies tend to move through a life cycle of growth, maturity, and decadence. And we'll sort of take a look at all, give a summary on each of ours with the next slide, please. Cheryl, why don't you go first and tell us why you place this particular location for Concentrix?
Okay, Concentrix it's only been around, as I pointed out, as a public company for 5 years, and they've got a lot of flexibility and increased revenues and also earnings that due to their expanding of the customer experience. And so I believe that they are still, even though at the end maybe, or towards the end of the explosive growth, are still in that location.
Okay, I'll go next. So Mart in the blue there, it's in the mature growth, but the thing is that the market is still very fragmented. But I don't think it's ever going to get really like big explosive growth numbers, just because of the nature of what they're doing. But the fact is that I think there's still a lot of potential there going forward, and I feel pretty comfortable that it's sort of right there in that middle of the good buying opportunities. Gladys, why don't you go next?
Mine is OLED in yellow there, and I placed it there just sort of at the edge of explosive growth. While they have a huge opportunity with panel TVs, I worry a little that their business model is based a lot on consulting, and whether or not that will get into be a huge business, I don't know. But I certainly think that they have a lot of opportunity ahead of them.
Kent.
I think Lithia is right at the top there of explosive growth. Even though they're a really old company, they are growing by buying other dealers, and then they're doing this innovation thing with Driveway, and so that's why I placed it there.
Okay, let's go to our next slide. And so now it's your turn to vote. You've been listening to us. Cheryl, go ahead and put up the poll. And again, it's not so much which one you think is a buy, but which one intrigues you the most that you want to do further research on. But to you, Cheryl. You get to vote once and only once, but it doesn't cost you anything. So let's see what we get. Okay. We're collecting responses. This is an interesting one. We got about 60% of you voting. Looks like I'm coming in last place. Sorry, guys. Let's see if we can get up over 80%. We're at 69. Anyone else want to be able to put in there? We're up to 70. Can we get any higher? Okay. Maybe. I think we ought to close it. I don't see anyone else voting. And go ahead and share it so they can see the final results. Everyone hated my Mart. Damn, got no respect. The Rodney Dangerfield of the group. But dead heat between OLED and Lithia. So that's a good one. Okay. Let's go to the next slide and we'll sort of go through some things. Kent, why don't you tell us a little bit about how people can get involved with us?
Okay, so if you found this very useful, make sure that you send out your Better Investing magazine to your friends, family members. Show them how to get onto the website. Just share the words. Next slide, please. And if you are interested in volunteering, or if you found this to be very useful, we could not do this without volunteers. Everybody who is on this call is volunteering their time and energy to provide you the information. And as a result, and I think everybody in this call will say, we have learned a lot just from studying these stocks, but we also are learning how to do these webinars, how to provide a good service to other people, and as well as we can attend our BI National Conference for discounted rates. So get a hold of us if you're interested in volunteering. Next slide, please.
Okay, so we went through stuff kind of fast and it may be kind of tough, but like I said, if you want to be able to take a look, you can go to the YouTube page and you can be able to find this. We have 7 subscribers, so let's see if we can get up over 10 by the time we do it next month. And those can be shared with people that aren't even in the BI community so they can sort of see what we're doing. Next slide. So again, we're really a learn by doing, which is the reason why we're doing it. We do have upcoming classes. And again, we had the slide earlier. Someone asked very early on, what's the SSG? And if you don't know, or if you need a refresher, those classes are great. You can also, if you're a member, there are videos up in the member-only section that you can take a look at. However you do it, however you feel comfortable learning, there's a manual as well. Go ahead and do that. It will just help you become a better investor, which is our goal. Next slide. Here are the people that presented, and you can reach any of us. And then at the end there, Marilee is the contact for my club, MCMC, and the like. And one more slide. And some of the SSGs were missing, so go ahead and reach out to us and we'll get to those if you want to see the final ones. So next month, we're going to be looking at MasterCard. We're going to be looking at Oak Street Health. And we just got the last two in here, Metropolitan Bank Holding Corporation. Maskey from Cheryl and Gladys's club will be presenting that. And we got a new person who's on here. Cynthia will be doing Cisco, the food, not the router, as her stock presentation. So we're looking forward to hearing from four new people. Next slide.
That's it.
All right, well, so we're at the end here. This is a time where we can open, if you have questions or something like that, now's the time to either type it or really raise your hand in the question box and we'll find you and unmute you and you can ask some questions. So let's see what we got. Anyone in here on our side, if you see it. There's
So
the first one.
Richard is asking, what is the fail rate of non-prime used car loans?
Okay.
You talked about those non-prime used car loans. 16% interest, pretty high.
It is. It is 16% is really is quite high. They've been really good about keeping them down around 4% or so is what they were talking about. But they
But
do.
we're talking about people that are having trouble with payments, or they're just having problems with their credit. So how are they going to get those low? How are they going to get those low cost loans if they're having problems getting credit?
Yeah. So no, you're right, and that's the whole nature of that market. Collections is a key part of that whole thing, and I didn't go into great detail about that, but that's one of the things. And having those, basically CarMart is, those old used car dealers that you used to see there and stuff like that. They basically have standardized and sort of brushed it off and made it sort of look like a newer operation. And they tend to acquire used car dealerships all around the country in smaller areas, just like Litha. And that's sort of how they reach out to their folks. So, yeah, that's the, I want to say the Achilles, but they seem to have done a pretty good job of managing it.
And Charles says that Cisco's ticker is SYY.
Thank you. We will get that corrected. Any other questions or, well, let's see, we have, let's do Mary Jo.
Oh yeah, Richard, oh, sorry, go ahead. Yeah, we'll do Mary Jo first.
Mary Jo, you're unmuted, so go ahead, and if you have a question, go ahead. Are you there? All right.
I don't see her hand raised, so I think not. So, Richard, you also asked about the EV market for Litha. Yeah, you'll look that several of the companies in their portfolio are doing EVs or will be doing EVs. So that is something that could definitely increase their profitability, especially for the service area.
Okay. You want to get this next one?
Liliana, we'll unmute you. I will. Oh yeah.
Oh, I think I messed you up. So she's self-muted. So go ahead and see your microphone, Liliana, and click on it. There you go. Tell us what you got.
Okay, thank you. Well, I enjoyed the presentation. I'm new. And I'm wondering, all the information, how do you get all the financials? Do you go to Morningstar? Is it a class if I'm interested in volunteering? Can you tell me more about it?
Oh, great questions.
That's
Great
all
questions.
you, Kent.
Okay, so I'm gonna start, and then Cheryl and Gladys and Kevin, you can all jump in. So there are classes coming up. In fact, Kevin is going to be the DC chapter is going to be hosting one here in March to learn more about the tools that we use, as well as where to find the information. A lot of the information is publicly available, or going to the library. The library is always a really good source because they provide both electronically, especially the libraries in Maryland provide electronic versions of Morningstar, Value Line, CFRA, and several other investment resources.
Okay, so you get it from the library.
Yeah, I mean that's the place where I go. And as far as volunteering, talk to any of those folks on that list up there.
Where do you live, Liliana?
And Richmond, Virginia.
Okay.
And this is the club that I found that is the closest.
Very, very
okay.
Good. Well, you're in the DC. Richmond is covered by the DC regional. It's most of Virginia, DC, and Montgomery County, Maryland. And Cheryl and Gladys are Virginians. I live in Maryland. They reach out to either one of them, or send an email to them. I see your email address, so I'll capture it and make sure we get some information to you. But yeah.
Okay, great.
Thank
you so much.
So Liliana, you were asking about where we get the data, and the data is the Morningstar data feed that goes into the stock selection guide tool. And that's what is pretty much consistent. And it updates consistently over short periods of time, so that we are assured that we have the most current information.
Okay, but you get it, if I'm correctly, you get it at the library, because I know Morningstar you have to pay, or you have to have a monthly fee if you need access.
Right, Morningstar Value Line and are offered by most libraries on their internet research side of their libraries. CFRA is offered by some, and it's also offered by many of the brokers. If you have a broker, you can look on their website to find the CFRA used to be the Standard & Poor's S&P folks, and they sold research part of it to that group CFRA. But those things, yes, you can. Also, with the Better Investing website, it can connect you directly into the company website for that company without leaving the Better Investing tool. And you can look to see what's going on the company website, or also look in the SEC for the financial documents for that particular company, the balance sheet, the income statement, and the cash flow.
Okay, great. Thank you.
Jonathan, did you have anything that you would suggest as far as responding to Liliana's question?
No, I don't have anything else to add.
I was going to say, Liliana, make sure if you look at if you download this presentation deck, you'll see how to sign up at the very beginning, how to sign up for notices from the chapter. It's around slides 10 and 11, and that will get you into the DC chapter, and you'll be able to find that way you'll be connected with all of us in the DC chapter to reach out and learn more.
Great. Thank you so much. Appreciate it.
What else do we got, Kent?
Also, if you said you belong to a club in Richmond?
No, this is Richmond. I didn't find a club at Richmond. This is what I found, the closest to Richmond.
Okay. In which case you can go back to the link for McNova. The next monthly club meeting is Tuesday. Tomorrow.
Yeah, I signed up for that one.
Join us online. Excellent.
Yes. Thank you.
All righty.
Thanks a lot.
Okay, thanks.
What else we got?
That is all I have seen. I'm not seeing any. Oh. Okay, apparently we have a whole bunch of folks interested in getting together in Richmond. So, and oh, Mohammed, the answer about where you can find a recording for the presentation should be in the slide deck, which should be attached. So that slide is in the slide deck, giving the information. So that'll be out there on YouTube.
So yeah, just look under over on the right-hand side under handouts. You'll see the number 2. There's one of the 4 completed SSGs, and then also that slide deck. And again, you can reach out to any of us at this email at our email addresses there, and we will get you that information. But it's up on YouTube. Looking under digging into the BI, and you will find us. Is that it? Or let's see. I think Jerry Brooks. So I'm going to unmute her. Jerry, go ahead and unmute yourself and ask your question. It's that little microphone. So go ahead and click on it so it turns green, and you'll be able to get there. Or not. Okay. Any more, or should we call it a night?
Well, let me go ahead and see if I can. Oops, I guess I can't share my screen. So out there on YouTube, I was actually going to show that, but apparently my screen is not going to let me show that. So there we go. There we go.
There you go.
Okay. So let's get this out of the way. If you go out to YouTube, you can go to Better Investing DC chapter, go hunt for that, and then you can actually find all of the presentations that we've actually published. So
yeah, this one's going to take a little while because I have to convert it to MP4, so it takes a day or two before I can send it to the person who puts it on the YouTube page. But we'll be getting January very soon. I sent them the ions, the data for that, and hopefully that will be up very soon. And then February's will be up shortly after that.
Yeah. Okay.
Anything else? Okay. Well, if that's it and we don't have any more, you saw our email addresses. Again, please make sure to download the handouts, and we'll see you all next month. Thank you all for coming.
Good night, everyone.
Good night.
Thank you.
Good night.